All right. I anticipate we'll have a few more folks join here in the next couple minutes, but that's fine. They'll just miss a couple quick introductions. Thank you all for joining today. I'm excited to be joined by Ethan, the co-founder and CEO of Flychain. While we discuss just kind of, a little bit of a strange time in the market that we're all kind of seeing, both in the way in which, the payer landscape, both, at the government level, but even at the commercial level, is starting to shift in autism care, as well as just like, other trends that we're seeing that just continue to put more and more pressure on small and medium-sized clinician-led, organizations. It's both the mission of Camber and Flychain to make it possible for you to achieve your mission of serving family and learners in a way that meets the goals of each individual where they are, as well as creates the opportunity for your staff to be successful and grow and develop. And we know that even though many of you or most of you may have entered into autism care not principally focused on the financial stuff and really attracted to the mission, it is one of those businesses that so much of it ends up being dictated by finances. So hopefully the topics that we're covering today are valuable to you. We'll stay at a relatively high level, but if there are specific topics coming out of this call that you'd love to spend more time on or need, some very concrete, specific direction around, we'll talk at the end. But both Ethan and I would love to offer ourselves up as resources, even outside of any commercial conversation. If you have some specific, issues that you'd like just some coaching or direction on. So with that, I'll quickly turn it over to Ethan. Ethan, why don't you say hello and do a quick introduction, and then we'll go ahead and kick things off.
Yeah, that sounds great. Thanks, Trevor. Super excited to be here today. Ethan, one of the co-founders of Flychain, and we're the financial operating system. And why we always love kind of doing these educational webinars, whatever it may be, whatever format it is with Camber is, I think we all see in this talk that, your finances and the operational revenue cycle and everything that goes, they're actually quite related to one another. And so with Flychain and Camber, I think we've had this great partnership over the last several years where we speak the same language, we have that same mission, and we actually use a lot of the same kind of data to help get to the right conclusions and things. So really excited to be here, and we'll kind of turn it back over to you, Trevor, to kick us off here on kind of just maybe like the state of affairs in ABA and what everyone is experiencing, and or if you're not, maybe soon will be. So I think it's just a really prescient time to be having this conversation.
You got it. Uh, that's where we'll start. So my name's Trevor. I run partnerships here at Camber. Um, for those who may not be familiar, it's the first time you're learning about us by joining this call. We provide end-to-end revenue cycle services. We're purpose-built for autism care, and it's the combination of both the best of technology and people to help you get paid every dollar that you deserve, so that you can achieve your mission. As you can see from my picture, I used to have more hair. And it's not because I have lived in your shoes, which is true, and being on the operating side of, a large national autism care company. It's just inevitably my genes kicked in. I just look a lot like my grandpa. So with that, jump into the good stuff. The goal for today is just, talk a little bit of what we're seeing in the market. Both, the stuff that's a little bit ripped from the headlines, but also what we're seeing in, direct conversations with serving our customers. We'll talk, about a couple different strategies from the different points of view that Camber and Flychain are coming from, both on, the revenue cycle and the financial operation side. And then, quickly get to a few tangible things that we hope everyone can leave the call with as far as ways to, take control over every dollar that you have. The goal is, though, for this to be super interactive, both in terms of leaving plenty of time for Q&A, where, it's completely fair game. Any questions that you'd like to ask, both on the topics that we cover, but things more broadly, we'll turn it over to you. But if at at any time during the conversation, if folks have questions, feel free to use the chat or to raise your Zoom hand, we can keep it very, very interactive. Okay. So what's different? Well, I mean, there's lots of stuff going on, and some of it has to do with just the fact that autism care has now become an important part of just the overall healthcare industry. I think it wasn't that long ago when relatively few payers covered it, and many state Medicaid plans didn't reimburse for autism care. And obviously, over the last 10 years, and even more recent, the last 5 years with Texas, and the last few states coming online, um, you know, we're very fortunate that now there's an economic incentive that allows families to go pursue a diagnosis, and then have that diagnosis unlock their life-changing therapy for their children and their families. But with that, strongly believe that there hasn't been a radical change in prevalence rates over the last few years. It's just that with suddenly a huge influx of families now having the ability to pursue care, obviously the amount that's been spent on autism care from relatively fixed budgets, coming from state Medicaid plans and things like that, creates a lot of pressure in an environment where states are probably going to be asked to do more with less here in the next year, depending on how budgets play out. Now, that creates one kind of strain. And then obviously the other type of strain that comes from that is in a new market where, there's a ton of growth. There's probably, some need for standardization, and it's taken a while for us to get there around just like what good documentation looks like, or forget even good documentation, is just what is the payer expecting, and do they even know yet, and things like that. That's taken a while to take shape. And so now, with a lot of our strong opinion is, a lot of the scrutiny that's being applied to claims, through the HHS audits in different states has a lot to do with unclear expectations as opposed to anything else. And certainly there's some inflammatory stuff that's happening in the news, but overwhelmingly, we just think it's this has been a space that's grown very, very quickly, lots of ambiguity and lots of variability across payers. I think the unfortunate piece is in the immediate short term, what that will look like for everyone are kind of calls for more scrutiny, and with more scrutiny probably increases the likelihood that audits will increase, that prepayment reviews will be implemented. So, the risk of cash flow shocks, I think we expect to significantly increase this year. And can talk, I think Ethan will talk a little bit about just how to think through cash management in a world where that might be the norm. And I think in addition to just more scrutiny that comes in the form of pretty stark payer action, I think the other thing that we're going to see for the foreseeable future is, especially for small and medium-sized clinics, less negotiating power when it comes to being able to get your rates in line with the rate of inflation, right? So I think one of the biggest challenges that we see over the next year is that, the cost of everything continues to go up. That's just inflation is just part of the macro environment, but also specifically in ABA, due to, as more clinics enter the space and there's more competition, which is something that previously, might not even been part of the experience of running a clinic. It's just, it's I open my doors and, there's always a wait list of people that need help. So I just try to serve them as fast as possible. Now there's reasonable competition in some markets for staff and potentially even clients. And so that cost of recruitment goes up, the cost of potentially, client acquisition goes up. So the cost of everything's going up. But because of now the scrutiny over the market, it's very likely that payers stand firm on rates for the next year or so, which, when, bottom line, when your costs go up and, your revenue stays the same, obviously all that means is you're just going to have to navigate a world where kind of every dollar is more important than ever as far as or like ensuring that you have every dollar that you can and you get paid fairly is more important than ever in order to protect your mission. So Ethan, I'll turn it over to you. I mean, to
Yeah.
me, I'm not an economist or a political guru or anything like that, but I think that's kind of the high level that we're seeing. I don't know. Do you have more granular insights, maybe in terms of the financial markets or anything like that? So.
Yeah, I would say just double clicking on some of the things you mentioned. We have already seen a little bit of an uptick in audits, and I don't expect that to slow down anytime soon, especially given some of the states and the actions that they've taken. And some of them are pretty like strong actions, if you will, like North Carolina, like cut by 10%. And it was just like it felt like they were using like a blunt object to, solve this. But that's just not the case. The other thing too, that I've found, and it actually probably touches Camber and your customers too, but like if you look at like AI spend and investment on the payer side of the fence, it's like more than doubled in the last like 18 months or so. And what I really mean by that is if you think about how audits used to take place without AI, and I think a lot of the technical product services that they're adopting, they can maybe audit like 5% of a state's market, and that will be, X number of businesses. But now with AI, there isn't as much of a limitation for them to comb through a lot of this documentation and claims. And so I think one thing that we want to highlight is yes, like they're using technology to be more, have more scrutiny, reject more claims, blah, blah, blah. But on the other side, like you can fight fire with fire a little bit here in that case. And so having the right systems that, we know Camber is implementing a lot of those same tooling. So by the time it gets to that pair, ideally, it's much cleaner. You're going to get paid and it's not going to send up any red flags. But overall, I think, Trevor, you kind of hit the nail on the head in like what we're seeing in the market. I'd also say too, in the next, probably the rest of this year, just to maybe put a blanket statement out there, we saw a few states really take this approach, but I would expect this to also, kind of snowball or spider web into other states too. We do see states kind of follow others. And so just to be aware that might be some like rocky waters ahead. And that's kind of why we're chatting today is to help arm you with some like insights to help navigate those.
Yeah, that could be one of the top things, Ethan. That could be one of the topics that if folks are wanting to chat about at the end or even individually, one of the things we do is, we monitor the submissions across $3 billion of ABA claims to look for trends, not just like what do they technically say the requirements are in order to get a claim, approved and paid quickly,
Yeah.
but also just how are we seeing like their operational, review process change in ways that are maybe like, not explicit. And so if I've heard from many folks that I talk to, even that aren't clients, saying like, yeah, I keep getting, it's very clear that AI wrote this report because it's like, it's very clear, like it's the same report that I see written every single time in a very certain way. It's citing missing documentation that is clearly there and things like that. And so we've even found that when it comes to denials management, the order in which you submit your documentation, like the ordering of the PDFs themselves, in some cases determine whether or not a claim gets accepted and denied. So yeah, more and more technology will be, implemented on the payer side. It won't always be implemented in a way that
Right.
like, with, the greatest concern for making it as, clinic friendly as possible. And so that's the new normal.
Yeah.
The last thing that I would say is this probably isn't limited to, or in many cases, it's probably true that there's more implications on the commercial side than the Medicaid side. One, because commercial payers are sort of involved in, managing MCOs or running MCOs. The other thing is that what we've heard from a long time, especially you think of the payers who a large percentage of their business is, being the carrier for a large company, who's self-insured. And in order to keep that customer happy, one of the things they would do is be more what they would avoid taking like aggressive action in important populations that have strong advocacy groups like autism care, because the last thing that the insurance company wanted would be to end up on the front page of the local paper saying so and so's, restricting access to care or being unfair and those things like that. I think the unfortunate part of the perception of bad actors in the markets might give them permission to say, like, we're taking strong action because we have to. We expect, even though a lot of it's focused on, state payers, we see this behavior probably going to be, true for all payers, including the large commercial payers as well. Okay, so we won't dwell on that anymore. I don't know if just from the group, there's any questions or feedback specific on this topic, or any specific changes that you'd like us to drill into.
Yeah, or even if you've experienced any of this firsthand, it would be helpful to also know if you want to throw in, yeah, I'm experiencing these issues in real time, or friend down the street is. I think it's helpful to do a little like mind share here, but no pressure.
Okay, well, we'll save it to the end.
Mhm.
Uh, as far as you know, the two different ways in which you can protect your finances during times of change or uncertainty. We'll talk a little bit about just like how to approach things on the revenue cycle side, and then move over to more general financial operations. And so, there's the stuff that you're probably already well aware of, and you're like, you don't have to explain this to me, or this isn't new information. But with payer audits and compliance, I think the big change here now is, it's probably worth thinking about, especially if they're, to the extent something happens, yet helping yourself, navigate through, or be prepared to navigate through a potential audit, or even be prepared for, the things that you might want to do, even if it's different than your current state today from a corrective action plan, would be helpful. So, Camber is not a consulting company, so I'm not selling my own services or anything like that. But if you need help just getting expert advice of how should my, based off of someone who, is in the market, they could advise us saying, like, based off a specific payer, what is it they're really looking for now from a documentation standpoint? Or what do you think the emergent standard is going to look like? Everything from signature location to the structure of the note and everything like that. I think it's probably worth not making a huge investment, but making a small investment, or even just getting some a little bit of advice and some pre-counsel probably better arms you for those conversations that might be coming down from the payer side. The other thing that we found is developing a relationship now with someone at the payer side. The worst thing that can happen in an audit is, and won't, I have nothing to say about United, but just say United is obviously a large carrier or Optum. If you don't know anybody over there and then you receive an audit notice, now you're stuck, trying to talk to a black box with, whatever the internal SLA is for responding to those tickets and things like that. And so, the goal of an audit is just to get out of it as fast as possible. And so the difference between a month or 3 months or even longer sometimes is just having a person that you can pick up the phone and have a real conversation with, and help them guide you, and then help them look into things and, get responses back to you more quickly. So when it comes to payer audit and clients, building relationships and just thinking ahead is probably the most important piece of it. Then there's, I think, when it just comes to collections themselves, I think a lot of times, just because, depending on your resources, or, the technology you have, or who's doing the work for you, a lot of times, I think people think of like, focus on, I'm just going to scrub the claims and I'm going to get them out the door as quickly as possible. And, if I don't get bad news back. If there's not an initial denial, I assume things are going well. But in a world where every dollar counts and you're not going to likely be able to negotiate up your rates, the number one thing that we would focus on here is just like make sure that you're not leaving any money on the table. So, if there's write-offs that you're like historically, we've just felt like as soon as we get the credentialing denial, we assume it's just not going to get paid. So we just proactively write it off. Developing a strategy for what are those common denials and making sure you have a strategy for fixing them. Fixing, the claim before you send it out the door the first time is probably the best way to ensure from a revenue standpoint, you're going to get paid on those claims. Tracking partial payments are really important. So a lot of times it's just like, and again, nothing specific about the payer, but another example is we know TRICARE will just write you a big check, right? Or just the money comes in and you don't know how to split it up. I don't even know what sessions it's related to. And so it's really hard in that environment to know whether or not I received the full amount for this session or was this a partial payment? And we do know from the data, and I can share it privately, but wouldn't do it here. There are payers that when you look at the data, we know that it's a strategy, right? Just structurally, the amount of money that's reimbursed on a partial basis up front, and then you have to go fight to get the rest. It's happening at a volume and frequency that suggests that it's not an accident or it's not specific to you. It's a structural thing. And so getting to the point where you can actually track in real time and connect the dots between a session and a dollar amount will just ensure that you're not being under reimbursed. And then the last piece of it is a lot of times it's like I didn't bother to bill for the parent session just because it's only X, a couple $100 or whatever it is. And a lot of times like when I have to group the claims, one of them gets submitted. So I just have just like become comfortable with doing a certain amount of care for free. Or I know my contract, I think I'm supposed to be paid more for, an RBT versus BT is probably not one, but with someone with a college education versus a high school education or, certain modifiers, I know I get paid for certain place of service differently. But it's really hard to keep track of everything in the contract. So I just kind of bill things generically, and I assume it kind of, the law of averages works itself out. I think it's the time is now to make the investment to really learn what your contract says, and then work to make sure that whatever is in your contract is built into your processes, so that you're not leaving, again, you're not just leaving money on the table in an environment where every dollar you deserve matters. So I'm going to pause there. I think we've got, okay. I thought we had a new chat, but that was just a previous one. I don't know. Ethan, anything on this side? Just even, this has more to do with revenue cycle or claims management, but is there anything that you specifically see as well when you're just talking to people who are kind of working through stuff related to the revenue cycle?
Yeah, two things I'd point out. The one is sort of what you hit hit the nail on the head on, which is like each payer, we do see sometimes like unique structural changes that get put in place. Like one thing that we found just interesting is in like Q1, the duration of a lot of payers like really ballooned a little bit. So like we were seeing the duration be consistently at like, 30, 45 days, and then it crept up to like 60 days with some payers in the beginning of the year. So there are certain things that I think we've noticed you'll actually have a better, line of sight into those reimbursement rates, but like we feel that as well. The other thing too, and this is always like a weird thing to bring up, but it's like any sort of like patient responsibility collections. I think a lot of our customers might feel a little like they don't want to be too like I don't know, greedy, if that makes sense, or they don't want to bother the families and patients. And like I totally get that, but there is money that is being left on the table there, and making sure that you're collecting that or putting people on maybe like a payment plan if it's like early in the year and they can't just foot that full like patient responsibility out of the gates. Going back and there are actually ways that you can streamline that so you can like kind of proactively collect on that. I just see like some folks leaving 5% of revenue on the table because they're not doing that. And And when we're talking about margins, reducing here, like that is technically money that, you need. And so again, that's just another thing that we've seen is just maybe some lack of good processes or lack of initiative to collect some of the patient responsibility there. But yeah, that's say like what you said makes a ton of sense. I'll talk a little bit more about like contracted rates and collections as well on making sure you're looking at the right numbers there. But everything you said is accurate.
You got it. Well, I'll turn it over to you. My
Yeah.
last thought on this is a lot of times the revenue that we're losing, and again, I was part of a large in-home ABA operations, and we struggled with RBT turnover, and doing the match of finding someone who was close enough to the family with the right hours, with the right family preferences, and the right skills and capabilities. Um, and so, a lot of times the revenue that we were the largest source of revenue leakage was just pauses in care. And so one of the things I would say when it comes to, submitting clean claims and preventing denials, one of the second order benefits of doing that isn't just that you get paid faster and you're getting paid the right amount. Um, Actually, it also prevents, disruptions in care where, it's like we didn't know that there was, a COB until 30 or 45 days because, we submit our claims every 2 to 3 weeks. A lot of them end up in manual review on the payer side. We didn't even know that there was going to be a denial until, 45 days or 60 days. And now suddenly we have this entire backlog of denials and we're uncertain what the status of the client is. So we have to put them on pause. And so I think, it's not just obviously better for the child. Pauses are very disruptive when it comes to, making progress and things like that. But it's also very disruptive, to your cash flow and your revenue as well. When denials become the source of, underutilization or pauses in care.
Yeah.
All right, Ethan, I'll kick it over to you.
Awesome. Yeah, so kind of taking almost like the opposite side of the same coin, which is I would say like kind of planning and really understanding things, also knowing the reality that we operate in as ABA business owners. We're going to talk about a few things, but just like starting off from kind of first principles here, we really like to encourage this notion of like a 3 month cash flow forecast. And so what I mean by that, when you think about cash flow forecasting, I'm not saying build some like insane financial model here, but it's really important to understand what's going to happen in the next couple of months. And that's that notion of having to manage an ABA business practice where you have fixed expenses and payroll, but then revenue is quite unpredictable. So when you think about that forecast, why we say 3 months is it's usually like a good kind of pulse on, it's good to know like quarter to quarter and plan and make course corrections, but also that's usually like a good like duration for payers that will kind of capture most of that. And so what goes into this kind of first cash flow forecast when you think about it? The first would be expenses. The nice thing with expenses is that they're generally like way easier to predict. And what I mean by that is you have like pretty fixed expenses. You've got your rent, some vendors, like maybe workers' compensation, things like that. And even payroll like can be sort of fixed. It does ebb and flow a little bit, maybe like over time, if you're hiring people, but that will be a relatively consistent payroll. Maybe it goes higher and higher as you grow. So those are the kind of expense side of the fence. Like there's some fixed, some variable, but largely fixed and predictable. Then there's the revenue piece. And then, so the two things that you really want to factor in on the revenue side would be for each payer, have a really good understanding as best you can on like what is the average duration. So what is that time to pay? How many days outstanding is your average claim with each of those individual payers? Because not all payers are created equal. We see like oftentimes just talking out loud, like Medicaid tends to, unless there are issues, tends to pay like pretty regularly. Commercial payers, some pay regularly, some absolutely don't. And so having a good pulse then for each of your revenue sources, how long is it going to take to get that money for services rendered today? And then the other one, which would be kind of going back to like contracted rate on the last slide, is and this is something I want to like really flag. When I ask folks like, hey, what's your revenue? Oftentimes the answer I get back is I built out this in the last month. That is not revenue. And it's also what you've built out doesn't mean you're going to get paid that. Let's say your duration's the same for every single payer. Like we do see people billing more than they're expecting to get paid, but they're operating as if they're going to get that full AR billed amount coming in, but it might be 75% of that, even if the claims go 100% through. So those are those two things on the revenue side that you want to map to then to those expenses and plan for the future. Again, this is a good example of like if anyone wants to get in the weeds here a little bit more, we can provide you kind of all those different variables, and you want to play around with that. You want to see like what can, it's kind of cash flow forecasting and also scenario planning as well. And I'll talk a little bit more about that. The finance fits like healthcare cash flow cycles. That's kind of where Flychain started our whole business. So kind of going to number two here. Depending on the state of like where you are as a business, early days, cash flow is going to be probably more pronounced, and also cash flow issues rather more pronounced, but you also don't really have options. And so when I talk about financing, that's what, Camber and Flychain are able to do in the form of advancing payment on insurance claims, but that isn't always available. So a few things, what we like to say, finance that like fits your healthcare cycle, we set up like lines of credit. And the whole goal there is if you need to cover a payroll and there's some delay in the action there due to payers, seasonality is a big thing that we see in our universe. Having access to financing that is not one of these like non-bank merchant cash advance lenders who are going to lend to you, they'll solve your near-term cash flow issue in the form of, a merchant cash advance. But then you're kind of on this predatory cycle at a 50% interest rate, and it's going to be a really uphill battle from there. So finding the right financing, depending on the state of like where you are as a business owner, is really important. Obviously, we do a portion of that. As you start growing too, there are other capital options out there for you. Good example would be like as you're expanding, maybe it's a term loan or an SBA loan that will give you a lot of money up front, and you pay that back over like 5 years or 10 years, and it gives you a lot more cash relief. So you're not having to worry about a lot of those like near-term capital issues as you are looking to expand. All lenders are created different. A lot of lenders that serve ABA are not good actors. And so look for the right folks that can lend, that understand your business. Banks, why we exist is banks really just don't lend to a lot of these ABA therapy providers due to lack of assets on their balance sheet. That said, start developing relationships with your community banks. That's actually kind of similar to the payer universe, where if you go, like community banks like serving the businesses that are serving their community and going and meeting them in person. We've actually seen some success there despite that blanket statement of banks not lending. So again, there is a lid for every pot, but also be aware that why we stress planning is so important. Capital doesn't always solve that problem. So then going to like scenario planning. This is kind of going back to that cash flow forecast. So what do we mean by scenario planning? What happens, right, when a hurricane hits your business? That happens all the time. And what happens if it's flu season and your office, basically 50% of your staff gets sick? Like there are all these things that can like dip revenue in your business. Seasonality is a big one too. Start planning for what does it look like typically from Thanksgiving to January, when we always see depressed revenue during the holidays. And then also, what does it mean for deductible season as well? And so stress testing your business is really important for all a host of reasons. But really, at the end of the day, you want to make sure you've got enough money in that bank account or perhaps a line of credit option for a rainy day that can get you through those issues. And so again, you'll hear me say this, probably said it on every other webinar, best offense is a good defense. And that applies for financial management. It applies for revenue cycle management because they're basically like, very, very intertwined in every way, shape, and form. And then the last, pretty simple, is clean financial data. Everything that we've talked about here is assuming that we're operating off of the right numbers. So a 3-month cash flow forecast not built out of the appropriate revenue targets, also all of your like, now very buttoned up expenses. That cash flow forecast could be very wrong if the underlying building blocks are not in place there. So clean financial data also gives us some other cool things that it's not listed here, but like benchmarking. So benchmarking and understanding like what does good mean for an ABA therapy provider of this size with this payer mix and of this region. And then by benchmarking things like gross profit, net profit, all of your expenses, salaries, rates. Like we can then use that data to troubleshoot and find out like which levers are bringing things down. So I'll give an example with clean financial data. You can go and very like kind of North Star benchmarks. Your gross profit is here, your net profit is here. The top 25% of providers are here. And depending on where yours shake out, again, it'll tell us where to look. So let's say your gross profit's good. That means you're delivering care very efficiently. You've got a good margin generated, revenues being generated by your clinicians. There's a nice margin between the expense that you have to payroll, you have to pay for those clinicians, but maybe your net profit is well below that. That immediately tells us to look more on the OpEx side. What is your operational overhead? What is your rent expense? Health benefits if you offer them, telecom bills. And so again, it's using like these financial benchmarks to determine where there is room for improvement. So that also again starts with that clean financial data, and then clean financial data lets you, borrow money at more favorable rates or has a higher, approval rate. It then gives you the ability to understand those various building blocks for those for scenario planning, as an example. So again, hopefully that makes sense. It's really just about getting the clean data and then doing some things with a more forward-looking perspective here. That is sort of the biggest takeaway from this slide is plan for the worst, honestly. Operate your business as if it were Murphy's Law, where anything that can go wrong will go wrong. And we've seen that happen time and time again. And the scenario planning enables you to like understand how risky your business is. Can I grow, or is now not the time to grow because of other maybe problems in my business where my margins aren't where they need to be? Growing your business when your margins are not good, generally speaking, means they're going to get worse.
All right. Do want to flag, please take Ethan up on the offer as far as like, if you're like, can you send me the Excel or walk me through the cash flow model? So definitely hit him up on for that. But any questions real quick before we advance on just like whether it's, what are different, financing products, anything around kind of scenario planning that we want to ask about real quick?
Yeah, and while people are maybe thinking about putting something in there, the other thing I would just really stress as it relates to like trying to get yourself set up rather with a line of credit is you never want to apply for any credit to anybody when things have already started to take a dip, when revenue's already started going in the wrong direction, because like first principle of lenders is they never want to catch a falling knife. And so if you are, doing consistent revenue, maybe even growing, like that is the time that you want to actually set yourself up with this capital, because when that revenue, you see it start, dropping for 1 month, you're already set up. And then lenders can lend into that like we do here at Flychain versus, oh, I've waited too long. My revenue's dried up for the last 2 months. There's nothing like a lender can do then, because we don't know if the revenue is ever going to pick up again. So that's just again, best offense, good defense. Set yourself up with stuff when you don't need it. And that might not be super intuitive, but just trust me on that one.
All right. So now it's just time for what are some things I can do today? Just prepare for the moment. If there's anything anyone needs as far as support, advice after the call, please do hit us up. Hopefully everyone is doing well, and in many cases, these are things that already exist, but wanted to make sure that you feel like coming out of this call, you're like, what are some building blocks, things that I could implement on my side, to start kind of, ensuring that I have the control that I need. So Ethan, why don't I kick it back over to you?
Yeah.
So what are some things that you'd like to call out here as far as some things that we could leave the call and do today?
Yeah, absolutely. So again, having that understanding of like the cash flow forecast, the building blocks associated there, so you can plan for the future. Planning for the future is what we see good ABA therapy business owners doing, and not being retro or just like responding, right? You want to be proactive, not retroactive when it comes to issues, dollars, etc. One thing we didn't actually talk much about, but I do want to stress the importance is like that diversified payer mix. If if you're just getting started, don't expect you to have a whole host of different payers, et cetera. But as you grow, setting yourself up with multiple payers, it just gives your business the ability to be just like way more resilient. So like we've always talked about what happens if you get audited by one payer. Well, if that payer's 10% of your overall revenue and that music stops for 3 months, hopefully the other 90% of payers can really generate that revenue to get you through it. So that's also something, whether that's us or Camber, like we'd love to talk to you of kind of developing a little bit more of that strategy. We kind of like to say you never want to have a single payer be more than like 40% of your overall revenue. Obviously, easier said than done. Also, especially if you're like Medicaid dominated, we usually see that maybe being a little bit higher than that or way higher than that. And then they're treating your budget as a living document. That kind of goes back to that like cash flow forecasting. And this isn't something you do like once a quarter either. I would say you want to revisit this sort of model of forecast at a minimum once a month because things do change. And so using that budget to your advantage, your budget, okay, here's what I'm willing to spend this month because I've done the math and I can afford it. I've projected my revenue that will come in. If you wanted to do a marketing push, like, are you going to be able to make that expense up front and hope that you're going to get patients and revenue to support that? So all of these things do bleed into it, and I realize one of the things that we take a lot of pride in here at Flychain is like having a lot of empathy for our customers. Many of our customers are clinician-owned businesses, and this is probably like a cash flow forecast might sound foreign or a little scary. Like, it's not. That's why we're here. But it is one of those like muscles we encourage our owners to exercise because while you might be a clinician owner, you're still now the owner of a business and need to generate some sort of profit to subsidize your entire business, your staff. You're paying yourself hopefully, but all this is measured twice, cut once.
You got it. Now, on the the pure RCM side, a lot of this I think would be good advice at any time.
Sure.
Uh, but the things that even for the folks that we don't work with directly, the things that we're advising folks to do are to demand the data from whatever source is responsible for your billing today, or can share some ways to use even like OpenAI and other tools to like help you visualize for yourself like what might be in a spreadsheet, and you've had like the numbers and you see it on a row by row basis, but haven't really kind of surfaced things kind of at kind of at the dashboard level. So one of the things to do today is, just establish what KPIs you're going to track and then go figure out how to get that data, whether it's you're asking it from a third party biller, you're asking for it internally, you're using, a PMS that you have today, or again, even just like using a third party tool like, a commercial AI tool to visualize for you. But the thing that I can help with separately, but would want to advise for is that this really isn't about kind of again like looking for just like it's not about operating at the high level like our collection rate is 95%. What we're looking to build the KPIs around are like what are the sources, like if we have a 10% initial denial rate, what are the sources of those additional denial rates, so that you can build processes to address those things. So if overwhelmingly denials are coming from credentialing issues, you might intuitively know that, but a lot of times, there's the shock of recognition once you put it on the screen or of a dashboard. And so being able to see that and then, build the strategy around that is super important. Also knowing what your collection rate by payer is will then inform, a strategy of where can I afford, if I have a wait list, how should I think about managing that wait list in response to, where I know I can best collect and most quickly collect from different payers and things like that. I would also advise, again, just to be reinforcing, now is the time to read your contracts if you haven't read your contracts in a while. And again, you're not just looking for the what's my headline number, per unit is, and do I want to get paid more? But actually think about how I should be designing the way in which I'm submitting claims in order to optimize, it's not, you don't have to like re-engineer the care that you're providing to maximize your contracts. But you should, look at your contracts and think about how you're going to bill based off of your care model to ensure that you're always getting paid the most for what you're doing. And again, if there's some process changes that you need to make, just to make sure that you're always, uh, you know, uh, you know, billing at the with the allowable amount for every single professional type and education level, et cetera. Please do that. And then, last but not least, again, I would say that the just because I've been paid on it today, spoke with someone last week who, the state Medicaid plan, they had been operating with them for 10 years and never had a single issue, never really even been under a single audit. That they're now in like going through a very challenging audit where it's not just that things are being questioned, but like they're basically being told that none of these claims should have been paid in the first place, given the documentation standards. And this is totally new information to them, in part because the state's still starting to determine their point of view on what's acceptable documentation. And so I would make sure that as you're thinking about how do I evolve my processes, I would say like what you want to start pushing your team to is documenting to the audit standard and not just like what's going to get, what do we think is enough to get the claim paid, which, will require a little bit of change management, but always good to, make the change now rather than obviously it'll be a lot harder work, digging out of that than, the kind of driving a little bit of change now.
Trevor, I love that. And I wanted to just double click on some of the KPIs that you talked about. So we actually see that as one of the best ways to kind of diagnose problems, or maybe not problems, areas for improvement if we want to, glass half full it here. And the cool thing with like, I guess, Flychain and Camber is there are other KPIs that we can calculate collectively. So what I mean is like Flychain, we've got like your net profit, your gross profit, all of those more financial benchmarks, expenses. And then on Camber's side, like collection rates, right? Like by bringing some of these together, collection rates, profitability by payer, like these are things by mapping expenses and granular expenses to granular revenue. We can then set KPIs like what is the target profitability per employee, target profitability per payer, per CPT code. And again, by really peeling that onion and setting like really granular KPIs, then you kind of understand with a almost perfect insight what the contributing problem is there. And so having like KPIs developed for your team, we see that be like a really good way to kind of like silo to a certain extent where those problems can occur so that you can go and like very easily fix them. Meeting with your credentialing team, meeting with your scheduling team, what have you, doing that on a cadence so that everyone understands what's contributing to these things so you can be proactive to fix them. Because sometimes we've seen without that exercise, a lot of problems can go unnoticed. Like maybe you lose money every single time this employee sees this patient under this code and payer. Well, like unless you're doing that exercise, that might get lost in the overall sort of financial picture of your business. So granular KPIs and accountability is something that we'd love to like lean in and help out here because it is critical and helps you run a way more resilient business and can get like right on top of problems really quickly before they snowball.
All right. Well, hope this content was helpful and useful, and that you're kind of leaving the call with a couple ideas. But in the meantime, before we jump, I'm happy to stay on. Ethan's happy to stay on. If there are very specific questions, talking about offline, if you think there's things that would benefit the group, happy to open it up.
Yeah, we could also share some cool, I would say some of those like financial out of the box KPIs, happy to share those. Like, hey, you want to target your gross profit to be over 45%. You don't ever want your, operational salaries to exceed 18% of revenue. There are some guardrails that we can help put you in place as you're thinking about scaling, might maybe not achievable day one, but setting those North Stars to get there. I think that's pretty powerful stuff that we can do together. And also, you all should join us at our event at CASP.
Anybody on the call joining us in Cast in Las Vegas? both be there, and we'll be sending out an email reminder to the group. But yeah, hosting a happy hour. Is it
Yeah.
the Monday night?
Yeah, that's right. Would love to see everyone on this is invited and would love to see you there. Kim, I will follow up with you on some of those, and I think Canberra probably has their own. And then there are these kind of KPIs that we're working on together, where it brings that more granular revenue data, and then also the expense data, because it's basically just the mapping exercise there. You just got to know where the data is and how to do it. But I've made a note, Kim.
Any other questions from the group? All right. Well, thanks everyone so much for your time, especially on a Monday. I hope everyone has a great week. I think spring is officially here, at least in New York. It's starting to feel that way. So uh, I hope everyone, joins us in Las Vegas for the cast event. And if there's anything you need from us, we'll be reaching out. But please take us up on any and all offers to help. We're here to make it, make things easier for you. So.
Absolutely.
All right.
Awesome. Thank you, everybody.
Thank you.